So why have mortgage rates risen so much this year? This is what I want to talk about here in this video. And right now my clients, our buyers, are facing two obstacles. We got both soaring home prices and soaring interest rates. So let's talk about, in this video, why interest rates are soaring. Okay. First, know this, often the 10-year Treasury bill is considered a proxy for mortgage rates, of where they sort of go up and down hand in hand most of the time. And at the beginning of the year, the 10-year Treasury bill yield or rate was 1.5%. Here in early April, it's up to 2.4%, or up 90 basis points or 0.90%. And why has the 10-year Treasury bill yield or rate increased so much? Well, it's because of inflation that we're all experiencing here in our country and probably will continue to experience the rest of this year. But in the past, the mortgage rates have been about 1.75% higher than the 10-year Treasury. But unfortunately here, so far this year, mortgage rates have gone up like 1.75% in total, or a little over 0.75% more than the 10-year Treasury bill has. And you go, okay, why have mortgage rates risen faster than the 10-year Treasury bill? Now, many people think it's because the Fed is starting to raise short-term rates and is going to be raising short-term rates all year, probably by 1.5% to 2%. But that is not why mortgage rates have risen. They've risen because several prominent Federal Reserve members, including Chairman Powell, have been talking about reducing their balance sheet and selling their holdings of mortgage bonds. Currently, the Federal Reserve owns about $2.7 trillion of mortgage bonds. And the fear is that if they start selling them, mortgage rates are going to continue to rise even higher and faster, and that has scared bond investors and bond traders, and thus mortgage rates have been rising faster than the rates or yields on treasuries this year. Now the question is, will the Fed follow through on their tough talk and actually do it? That's a whole other question, and whether they're right or wrong, here's what I'm worried about. This is the same group of people that were telling us all of last year that inflation was transitory. We now all know how wrong they were. And I'm worried about they'll be wrong here too, because if they do start selling their mortgage bonds that they hold, we'll see rates rise more. Now, I don't think they'll do it, and I've talked to some experts who don't think the Fed will start selling their mortgage bonds because it would be so disruptive to the bond market and potentially cause chaos out there. But I don't put anything past the Fed either, because they maybe have a lot of knowledge, but sometimes they lack a little bit of wisdom. And so, the moral of the story here for you, my viewer, is procrastination does not pay off in real estate. So don't wait to buy a home in hopes of mortgage rates dropping. Okay, you need to be buying now, and then later, if and when rates do drop, you can refinance and take advantage of those lower rates then. So if you have questions, maybe you disagree with me, please text me. My number's 303-881-6374, or feel free to share your thoughts and opinions down below. And please forward this video, my channel ID and everything, on to your family, friends, and coworkers.